Well, we're still watching your ag commodity trade. I'm Marlon Bowling with you, and I'm joined this time around by Ted Seifried of Zaner Ag Hedge. He is located in Chicago, and together we're going to take a look at what's happening in the markets. Ted, I want to review the weekly export sales numbers that came out from USDA this morning, if you don't mind, and give our audience that just tuned in a chance to see these numbers. Now, on the corn, it actually, that's not a misprint on the screen. It was a negative number. It was down a negative 194,600 tons because of all the cancellations last week. Well, we had soybeans coming in at 356,700 tons last week. The wheat, 490,800 tons. That was pretty good. On grain sorghum, we only sold 1,200 tons. Just kind of a yawner there. We had upland cotton sales of 258,200 running bales, and we had rice sales last week of 46,600 tons. All right, let's take a look at our current trade then on the futures board. We'll go to our contracts and our information provided by bar chart here. So July corn just kind of holding steady at 5 cents lower at 583.5. It just hasn't moved much since we got open this morning. We have December corn down 4 at 526.5. It's just kind of stuck there. Now in soybeans, you have July down 11.25 at 1406.25. It's hovering basically a little over a penny from our low of the day. And if you look at our November new crop, we're down 13.5 at 1258.75. Now we do have some gyrations going on, if you will, in the wheat trade. In Chicago, July is down a penny and a quarter at 638.5. But it had been as low as 629.25, so it's come off of that by 9 cents already. Kansas City wheat, the July is now up 3 3/4 at 788.75. That's exactly 20 cents off of its earlier low this morning. That's quite a rebound. Now we're back within a nickel of our high from last night. So keep an eye on that one. On the Minneapolis wheat, July is up a half cent at 804. So that has rebounded a good, 16 cents already off of its earlier low this morning. So kind of a turnaround taking place here on some of the wheat complex. Ted, I want to get your thoughts on how the markets are performing after that big day up that we had yesterday.
Yeah, absolutely. And so wheat is the one that's really trying to hold it together after what we had yesterday. That was an actual key reversal. We made a new contract low, turn around and close above the previous day's high. A lot of times, your technical traders, i.e. your funds, look at that as a buy signal. So they are, to some extent, following through, and they took today's earlier dip as an opportunity to cover some more of their short positions. So wheat is doing the best out of the entire complex in the grains. That being said, those corn export sales, the number that you had up there, that's combining old crop and new crop. The old crop cancellation, a negative 315,000 or 345,000, that's the big disappointing number because we didn't find enough sales to outshine or to make up for the Chinese cancellations, not even close. And that's a bit of a concern. Where is the old crop corn demand right now? And does China continue to cancel? So yes, pressure on corn. It's trying to follow along with wheat, but those export sales are kind of precluding that a little bit. I'm also going to say that we're in a general risk-off tone today because of the Fed decision yesterday. It was what we were all expecting at a quarter-point hike, but we were hoping for, or the trade was hoping for, some easier language for them kind of hinting towards pausing at this point. They did have slightly easier language than what they had the previous time they raised a quarter point, but it wasn't enough to appease the market. So look at like crude oil gapping lower in the overnight session. And just, we're not feeling all warm and fuzzy about the economy today. So you got a lot of conflicting factors happening for the grains right now. One last thing is I'm going to say yesterday, the big talk was what happened with the Kremlin being attacked. And yesterday the trade was very concerned that there was going to be a very harsh reaction coming back from Russia. And so far, Russia hasn't blown anything up, at least any more than they have been doing. So that's taking a little bit of the fear out. Also, I think we've all watched the video, and it seems hokey. I don't know. But at least there's not this tremendous fear of escalation to nuclear war or something like that here this morning, as opposed to what we were doing this time yesterday morning.
That all remains to be seen, of course, and we have to wonder if the other shoe won't drop in Ukraine. Keep hearing rumblings about a scheduled offensive for Kiev. I don't know if it will happen or not, but people are nervous about it here this morning. We'll keep our eye on that. Ted, we'll take a break right here, and we'll come back and we'll examine our cattle and hog markets on a Thursday right after this. Now, let's shift our attention over to livestock. We'll start with live cattle futures. Our quotes are from Bar Chart. Live cattle today, at least, are a little bit higher this morning. August now up 40. We're at 159.95. And now you have October gaining 22 cents at 164.22. So as of now, at the moment, you have the nearbys showing the most strength. Now that would satisfy the bulls as opposed to maybe some bear spreading. Now the feeders, they're kind of wishy-washy today. You have the August contract now at 223.27. That's down 25. September is down 27 cents. Lean hog trade, here you have the June up one tick at 88.02. July, though, down 47 at 88.85. Ted Seifried is with us. The export sales on beef and pork were pretty good this morning, but the market's just kind of acting unenthused.
You know, actually, Marlon, I'm going to say that 20,000, a little over 20,000 metric tons in beef is kind of saving the day in cattle. With the risk-off trade that we have, with the concerns that we have about the economy, you know, a lot of times that hits cattle the hardest because we're worried people won't go spend the money at the butcher's counter, or they'll look for cheaper forms of protein. But the export sales, I think, kind of help that. That and the technicals. You know, we've had a bit of a correction. We're kind of trying to find some support right here. Maybe this has been enough of a correction as we drift into grilling season, because eventually it is going to warm up on the eastern half of the country. And when it does, I think a lot of the doubters are going to be surprised by how much demand there is still out there. People are still spending money despite inflation, recession, so on and so forth.
Yep,
hogs,
you can tell. Oh,
yeah, hogs, you kind of wish there was a better reaction from a good export sales number as hogs. Yes, albeit not as good as what we saw last week. Still 47,000+ metric tons. Hey, that's a solid number. I think today's action in hogs, the sideways trade, is more of a bottoming formation. I do think that the hogs are really trying very hard to put a longer-term bottom in.
Fingers crossed for producers out there. All right, well put. Thank you, Ted. I appreciate the help today. Ted Seifried of Zaner Ag Hedge. There you go, Suzanne. Hogs hanging on for dear life today, anyway.